Hi students, I am Prakash, Chartered Accountant and acting as academic advisor in Masterminds from the past 20 years. Here is a short video introducing matchless Masterminds briefly for the convenience of the students who came to this channel for the first time. Masterminds was established in the year 2002 and has been acting as a reliable platform to offer coaching for CA and CMA courses. Masterminds is undeniably the pioneer and the leader in MEC, CEC, CA and CMA courses with nearly 20,000 admissions per annum. This is an incredible initiative by three edupreneurs, namely Mohan, Radha and Prakash, that is me. All three qualified CA at a very young age of 21 years and started this organization under the mentorship of my father, Mr. M. Siv Prasad Garu. So Mr. Mohan is my brother and Radha is my sister-in-law. And by the way, it's me, Prakash, Chartered Accountant. So here are the courses for which we offer the coaching. We offer coaching for MEC, CEC groups exclusively at intermediate level, and we also offer integrated coaching for MEC along with CA, CMA Foundation. And we also take exclusive admissions for CA, CMA Foundation or CA, CMA Inter. And we also offer coaching for CA, CMA final level as well. Recently, we have started a unique academic program at intermediate level, that is MEC Pro, aiming for the students who want to pursue BBA or MBA or CLAT courses in future rather than CA or CMA, and we have received a huge applause for the same. So 20 years of experience, and we have finished more than 155 batches of CA or CMA Inter in Guntur alone and similar number of batches in all our branches together. So till now completed 17 batches of CMA Inter and 18th batch is going on. Successfully completed 25 batches of CA final till now and 26th batch is running now, and we have also successfully completed 4 CA or CMA final batches in Hyderabad. So till now our students are able to achieve 990 All India ranks at various levels of CA, CMA courses, and our students are able to achieve first rank for 48 times in various courses for which we offer coaching. So in a single year, our students are able to achieve 3 All India first ranks in the year 2020, and till now our students are able to achieve state first rank at MEC intermediate level for 18 times, that too 8 times in a row. In a single attempt, our students are able to grab 98 All India ranks at CMA Inter and final results of January 2021 and our All India ranks in February 2022 CA results. And here are the 10 All India ranks in CA final results of 2021 alone. And till now, our students are able to secure 93 All India ranks at IPCCR CA Inter level in the last 9 years. And here is our physical presence: Guntur, Vijayawada, Hyderabad, Amirpet, Dilshuk Nagar, Vizag, Tirupati, Kurnool and Rajahmundry. And here are the locations where we have branches. And here are the contact numbers. Here is the list of our physical presence and here is the list of our online presence. And for your kind information, we don't have branches in any other locations other than stated here. So please do install our Android app Masterminds Online Classes from Google Play Store, and if you belong to iOS platform, then install an app called Class Plus from Apple Store and enter the organization code as MZGUN. In this app, you can find a large number of useful content like regular batch videos, crash batch videos, rapid revision batches, guidance classes, motivational videos, amendment videos, Masterminds test series, whatnot. Large amount of useful content is already available in the app. In our app, you can find a section called study material where large amount of free content is also available. Until now, more than 24,000 students have already downloaded our app and we are nearing to 25,000. Sir, is it possible to interact with the directors directly? Yes. If it is an administrative issue, you need to contact Mr. Mohan sir on this mail ID. If it is academic issue, you need to contact me on this mail ID. So thanks to all our students who are our true brand ambassadors and who helped us to reach this position. All the best.
Hello everybody, this is Mahmood Sheikh, CA Inter Auditing faculty. I hope you guys are all doing good. I hope you guys are all doing your preparation at a very good level. So now why we are coming before you through this video. So as you all are aware, recently our ICAI has released an RTP which will be applicable for our examination for May 2022 attempt. So we are going to do now a series of videos through which we will try to bring to your attention the things which are covered in this RTP May 2022. So that is going to be our agenda why we are doing these videos. So without any further delay, let us jump into this RTP 2022 attempt. So let us have a look at it. What are the things which are covered in this RTP? So that is what going to be our main objective of doing this series of videos. So without any delay, I'm directly going into this particular RTP. So let us have a look at it. So first of all, they have given some academic update. See, actually, if you ask me, it is not at all an academic update. It is already there as a part of our study material also. Nothing but Section 53 of the Companies Act, a slight amendment, but it is actually covered in our board material itself. Nothing but what they try to say here is Section 53 of the Companies Act, which is talking about shares issued at a discount. So what will be the provisions which are required to be complied when a company is issuing a shares at a discount? So straight away they say that the company shall not issue a shares at a discount except you are issuing a sweat equity shares. So for the purpose of sweat equity shares, we can issue the shares at a discount. Other than the sweat equity shares, we cannot issue the shares at a discount. And if any shares are issued by a company at a discounted price, it is going to be completely void. It is going to be invalid. But apart from the above provisions, you can issue shares at a discount if you are giving it to the creditors. That means you are having some debt which is required to be paid to the creditors, but you are converting that into shares as a part of any statutory resolution plan or as a part of any debt restructuring scheme. So then also we can give the shares at a discount for the creditors in settlement of the debt. That also can happen. That is also one exception. And where any company fails to comply with the above provisions, that means if they don't if they issue the shares at a discount for other than sweat equity shares or other than as a settlement to that creditors, then you have to comply, then you have to face some punishments from the act. So that is what they are telling you here. When any company fails to comply with the provisions of this section, such company and every officer who is in default shall be liable to a penalty which may extend to an amount equal to amount raised through the issue of shares at a discount or 5 lakh rupees, whichever is less. So if you don't comply with the above provisions, that means irrespective of the above provisions, if you issue the shares at a discount, then whatever money you have raised by way of issue of shares, that amount or 5 lakh rupees of amount, whichever is lower, that will be your penalty. So who has to pay this penalty? Company and every officer who is in default. And also the company shall also be liable to refund all the money received with interest at the rate of 12% per annum from the date of such issue of the shares to the person to whom the shares have been issued. That means if you issue shares at a discount, that is void. No. So whatever money that you have raised, so penalty you will pay. In addition to that penalty, whatever money that you have raised from the shareholders by way of issue of shares at a discount, all that money needs to be refunded back to the shareholders, not just the amount which you have received. On that, the interest has to be paid at the rate of 12% per annum from the date you have issued the shares till the date you give the refund. So for all that dates, interest at the rate of 12% needs to be paid. And as an auditor, what we will check with regard to the issue of the shares, the movement in the share capital, nothing but you have to take what is the last year's share capital balance, what is the current year's share capital balance, is there any difference, is it because of issue, is it because of reimbursement, is it because of issue, is it because of buyback. So you try to analyze the movement in the share capital. Nothing but they are telling what audit procedures I need to perform regarding share capital, a brief they are telling. He should verify that the company has not issued any of its shares at a discount by reading the minutes of the meeting of its directors and also shareholders authorizing issue of the share capital. That means go through the minutes of the board of directors, go through the minutes of the shareholders meeting and try to find out whether the company has given any shares at a discount. Further, the auditor should also verify whether the company has given the shares at a discount to its creditors when it is converted into shares by way of a statutory resolution plan. Like as we have seen this point now. So in this point they are telling you can issue a shares at a discount as a settlement for the creditors. Check whether any such shares are issued at a discount in settlement of the debt to the creditors. Nothing but these the provisions regarding section 53 regarding the issue of shares are complied with or not, I need to check. So why I told you this is not actually amendment means why, because it has already been given as a part of our board material itself. So if I take you through that, yeah. So if you download that study material which is applicable for May 2022 examination, in that only they have given. So whatever we have read now, so all these things are already given here. So I think this is not actually any significant amendment. So just they have given the content here. Next. So now let us talk about rest of the content given in that RTP. So now we will be jumping into the questions. So let us try to understand what are the questions they have tested. So as we all are aware, at the beginning they will try to give some case scenario based MCQs. Let us try to understand what are the case scenario based MCQs which are given. So let me try to read it first, read the content first, then we will read let us try to first understand the case study, then we will read the questions regarding the same. So let me zoom it out. Yes. So case scenario number 1. Save Lives Limited is a listed company which deals in the manufacture of sanitizers, floor cleaners, dish and fabric cleaners, etc. In spite of spread of COVID-19 in the country, the company's sales have been very high in the last financial year due to essential products it deals in it. Very simple, they are telling what is the business the company is doing, and they are telling that since it is an essential product, the business is not at all affected here. Next one. The company is highly automated and is driven by IT systems and applications that are used in the preparation of the financial statements of the company. That means this company is having a automated environment. Next one. The company used an integrated enterprise resource planning system since last 5 years, nothing but they are making use of one consolidated ERP. KRAN and Associates has been appointed to conduct the statutory audit of the company. Auditors are appointed. The firm consists of 8 partners and CAN has been appointed as engagement partner for the audit of Save Lives Limited. So the name of the auditor is KRAN and Associates, and who is the engagement partner? CAN is the engagement partner. Next one. CAN briefed the team about the audit and also how would IT would be relevant to the audit of Save Lives Limited. The team obtained an understanding of the entity and its automated environment, which involves an understanding of how the IT department was organized, how IT activities were carried out, IT dependence and relevant risk and controls. Everything the company tried to understand. Everything the engagement team tried to understand. One of the team members wanted to understand the importance of different types of controls in an automated environment, like general IT controls, application controls, IT dependent controls. Same was discussed in detail along with the relationship between different controls. Nothing but team members want to understand various kinds of IT controls. This we have seen a dedicated question in our chapter, Audit in an Automated Environment. Next. The company's Act 2013 has placed a greater emphasis on the effective implementation and reporting on internal controls of the company. Nothing but we have reporting on internal financial controls as per 143 subsection 3 clause I. So that's what they are referring. So CAN decided to himself evaluate and validate the design and operating effectiveness of internal financial controls over financial reporting of the company as on the balance sheet date. Internal financial controls refers to the policies and procedures put in place by Save Lives Limited for ensuring adequacy and also operating effectiveness of such controls. Nothing but company is having some internal financial controls getting implemented. The audit team decided to use the tools and techniques that auditors use in applying the principles of data analytics, which are known as computer assisted audit techniques. Nothing but they are making use of data analytical tools. Data analytics could be used in testing of electronic records and data residing in IT systems using spreadsheets and specialized audit tools like IDEA, ACL to perform various functions. Nothing but these are the various examples of data analytics tools. By the time you complete reading this case study question, so a thing which should have striken your mind is this question is obviously regarding audit in an automated environment. That is for sure. Right. So now let us try to understand what are the questions they are getting tested. I hope everybody is comfortable with the case study. Very simple. They are telling what is the business of the company. They are telling they are having an automated environment. They are having various controls and they are making use of data analytics tools, and they are also having internal financial controls. That's all. Now let us try to understand what are the questions they are asking. Under which situation is IT not relevant to an auditor? In below options, which is not a factor for IT being relevant to the audit. Increased complexity of transactions. This is obviously a reason why IT is becoming relevant for an auditor. So this is not a correct option. High-tech nature of business. Today the nature of the business is very much highly technology oriented. Because of this, IT is becoming more relevant. So this is also not a correct option. Volume of transactions is low. this is not actually the case. Generally, volume of the transactions is high today. Like insurance and banking sector, the volume of the transaction is very high. So that's why IT is becoming more relevant for the auditor. But the question which they are asking is which of the factor is not a reason for IT being relevant to an auditor. So the correct option is what? Option C. So in fact, volume of transactions is high, that is making IT more and more relevant. But in the option they are given, volume of transactions is low, which is completely wrong. So this is actually should be the correct option. Let us read the last point also. Company policy. Because of the company's policies also, IT is becoming more relevant for the auditor. Why? Because today companies are overly relying on technology. So what should be the correct option? Option C is going to be the correct option. Now let us talk about second question. Which of the following is a risk that arises from the use of IT systems? So what risk will arise? So first one, direct data changes, backend changes. Yes, these kind of changes can happen. Limited or monitored access. No, excess access is a risk, right? So excess access or privileged access is going to be a risk from the use of IT. Limited access is not a risk. Adequate segregation of duties. No, when a system is implementing, there will be no segregation of duties. Not having segregation of duties is a correct option for risk. Authorized access to data. No, unauthorized access to data is the risk. So what is the risk which is arising from the use of IT? Direct data changes. That means someone without any authorization, they can make the changes to the data itself. So, and you will not be able to find a trace of it. If data is getting modified in a manual manner, you will have some trace like corrections, modifications, something will be there. But when it comes to systems, data can be just like that modified and we do not find the trace also. So this is going to be the risk from the use of IT. For the remaining three options, opposite things are risk for the use of IT. Like excess access, no segregation of duties, unauthorized access to data. These are actually risk. These are actually opposite terms to the risk. Next one. The relationship between two controls is such that what controls are needed to support the functioning of which controls, and both are needed to ensure complete and accurate information processing through IT systems. See, we know that general IT controls are more important. They are very much needed to support the functioning of application level controls. What is the correct answer here? So you need to have general IT controls. If you have proper general IT controls in place, that will help you to properly work application controls also. So correct option should be general IT controls are needed to support the functioning of application level controls. So let us try to find out the correct option here. So option A, IT dependent controls, general controls, no. Application controls, general controls, no. General controls, IT dependent, no. General IT controls and application controls. This should be the correct option. Now let us talk about the next question. The term internal financial control refers to the policies and procedures put in place by companies for ensuring which of the following. So which of the below mentioned things is an objective of internal financial controls? See, this question was very literally tested from the board material. So let me show you what they are expecting you from this question. So if I go through that internal financial controls, yeah. See, this is how in the chapter audit in an automated environment, internal financial controls are defined. So as I have told you, this question they are literally testing. That means word by word they are testing. So as you could see here, they are telling the objectives in the study material. The internal financial control basically refers to policies and procedures put in place by companies for ensuring what? Reliability of financial reporting, efficiency and effectiveness of operations, compliance with the laws and regulations, safeguarding of the assets, prevention and detection of frauds. Now let us see what are the options they are telling. Reliability of financial transactions, not actually, here they say reliability of financial reporting. But in fact, in the question they are giving what option? Reliability of financial transactions, which is actually wrong. This option is not correct. Efficiency and effectiveness of the operations. Is that option they are here in the definition? Yes. Efficiency and effectiveness of operations. Yes. This is one of the objective. Safeguarding of human resources, not exactly, it will safeguard the assets, not safeguarding of the human resources. So this is also wrong option. Prevention and detection of errors, not actually, here they say prevention and detection of frauds, but here they are telling prevention and detection of errors. So why I told this question is tested very literally is, see, even I can say it will prevent and detect the errors also, it will help for identifying errors also, internal financial controls will help. But here their objective is to test the definition exactly. So that's why in each of the line they have made only one word change, like reliability of financial reporting. Instead of that they have replaced the term with financial transactions. Safeguarding of the assets, instead of that they have replaced with human resources. Prevention and detection of frauds, they have replaced with errors. So this minute changes they have tested and they are asking you to remember the exact definition. So one of the objective of internal financial controls is this option B, efficiency and effectiveness of the operations. Now next one. Data analytics can be used in testing of electronic records and data residing in the IT systems using spreadsheets and specialized audit tools like IDEA, ACL to perform which of the following. That means you will use data analytics tools for performing which of the following. Can you use it for evaluating control deficiencies? Yes. If you make use of data analytics, by that you can come to know what and all internal controls weaknesses are there. Compliance with applicable laws and regulations? No. Data analytics has nothing to do with compliance with the laws and regulations. This option is wrong. Authorized changes to data or systems? No. Our objective is to find out unauthorized changes to data or systems. Providing latest information? No. Data analytics is used for analysis, not for providing up-to-date latest information. So the correct option is going to be evaluating impact of control deficiencies. Even this also we can find it out in the study material. So like as I show you, as I take you to the topic of data analytics. So as we could see here, so one of the objectives they are telling this one, evaluating the impact of the control deficiencies. That's what they are expecting you to answer. Clear about it? So the correct option is 1.5, option A, evaluating impact of the control deficiencies. Now let us talk about case scenario 2, what they are trying to say in the case scenario 2. You are partner in ABC and Company, a chartered accountant firm based in New Delhi. ABC & Co has been appointed as statutory auditor of One Time Limited, a public limited company which manufactures and sells wall and table clocks and has many branches all over India. They are telling about business of the company. One Time Limited has been exporting the clocks since the past 2 years. However, the domestic sales have contributed towards major source of revenue. That means they are having domestic sales also, export sales also. You being the engagement partner have started the audit for the year ended 31st of March 2021 along with your 5 team members. One of the team members, CAB, started verification of inventory in addition to other procedures. He also checked that valuation of inventory has been recognized in accordance with AS2. Okay. During detailed checking, he noticed that amount spent on salary of administrative employees and normal wastage on production of the clocks had not been added to valuation of inventory. Is it correct? No. Why? Because it should be added to the cost of the inventory in the calculation. The contention of XYZ Limited was that since the cost was not directly related to production cost and so not added to the cost of inventory. No, this remark is not correct. This should have been added to the cost while deciding cost or NRV, whichever is lower. Okay. Let us talk about next paragraph. CAB also noticed that one of the suppliers of Online Limited, Mr. AM, had sent some raw material to the company for storage in their warehouse in March 2021. That means the stock belonging to other company is lying with your company, is lying with your client. Due to renovation work going on at his warehouse, his stock could be damaged and so he had requested One Time Limited to keep the same in his warehouse. Your client One Time Limited is holding the stock, but it is not your stock, some other party's stock. So some renovation work is going on in his premises, so that's why he asked us to keep that stock for him on safe custody. So One Time Limited contended that since the raw material was anyway billed to the customer next month, so the same has been included in the valuation of stock. Since physically the stock was present in the warehouse of One Time Limited as on 31st of March. Do you agree with that statement? No. Why? Because you might be having the possession of the stock, but you are not the owner of it. So that's why you can't show it as a part of your balance sheet. It should form part of the balance sheet of this particular supplier, Mr. AM, not your stock, not your client's inventory. So this is also wrong. Next one. The company has issued shares at a premium and the premium received on the shares has been transferred to securities premium. Very good. The same was then applied in writing of the expenses of selling the clocks. It is completely wrong. Why? Because section 52 talks about how to utilize share premium. So they say only for 5 purposes. Can it be used for writing of normal expenses? No. Writing of preliminary expenses, yes, this can be done. And also writing of commission paid to sales agent. Can they use it for this purpose? Definitely no. They have verified the same in detail. So only one thing is correct here. Securities premium can be utilized for writing of preliminary expenses only. Rest of the 2 purposes are wrong. While verifying the debtors, team member C noticed that there were a few trade receivables pertaining to export sales, mainly to England. So nothing but foreign trade receivables. Mr. C verified the same with respect to the invoices issued and other supporting documents. The amount booked as on 31st of March was based on exchange rate as on the date of invoice. This is also wrong. It should be booked according to exchange rate as on the date of the balance sheet. Closing rate. It is a monetary item. No. AS11 says monetary item should be stated at a closing rate. Next one. Mr. T, another team member, verified the fixed assets of the company. One Time Limited has purchased a few cars for its directors during the year of audit. The same were appearing in the fixed asset schedule of the company. Mr. T verified the same with respect to the invoices as well as physically verified the assets in the company's premises. Since the cars were for the official use of the directors, they were purchased in the name of directors of the company. That they can't do. Since they are using it for official purposes, the car should have been purchased on the name of the company. Mr. T verified the amount with the invoice and checked the registration and insurance documents. Okay. One of the article clerks was assigned the work of verification of provisions appearing in the balance sheet. He wanted to understand from you the circumstances in which a provision is recognized in the books of accounts. You explained him the situation in which an entity will recognize the provisions in its books. Nothing but they are asking something about. Next one. One Time Limited has invested in the shares of other companies. One of the companies has declared dividend on its shares. One Time Limited has not recognized the same in the P&L account. Team member R has asked you to look into the matter since he is unable to understand the reason for the same. Nothing but they are asking about dividend recognition. And we know that AS9 says dividend should be recognized as and when the right to receive the dividend is established. The company has spent a huge amount on repair and maintenance of the machinery used for the production of clocks. The amount was accounted for in two parts. Repairs were booked as revenue expenditure and annual maintenance charges were capitalized into the machinery cost. Mr. R has verified the same in detail and raised her observations. They are telling this treatment of repair and maintenance expenses also. Now let us come to the questions. Is a raw material lying in the warehouse of One Time Limited accounted for correctly in its books of accounts? As we have seen, some others properties, they are lying in your premises. No. Can you record it in your client's books of accounts? No. It should form part of that respective third party, Mr. AM. So have they included in the books of accounts? Is it correct? No. Since the same belongs to Mr. AM and should appear in his books, not in our client's books. So option A is correct. Yes, since the same is in the possession of One Time Limited, no, this option is wrong. It would be shown in the books of accounts of both. No. It should not appear in the books of accounts of One Time Limited or the AM Limited. No, it will form part of AM books of accounts. So option A is the correct option. Next one. Which exchange rate is considered for accounting of foreign debtors at the year end? So since debtors is a monetary item, what rate we should use? Exchange rate as on the date of balance sheet. So nothing but exchange rate on the last day of financial year. Nothing but balance sheet. Which of the following assertions with respect to fixed assets have not been complied with by the company? As we have seen, plant and machinery were registered in the name of directors, not on the name of the company. So here ownership, nothing but rights is getting affected. Existence is there, valuation is there, cut off anyhow not suitable for fixed assets. But what they are telling, rights and obligations, since the property is registered in the name of the directors, not in the name of the company, so the company will not be considered as owner. So there is a problem with rights and obligations. So this assertion is getting affected. Next one. Which of the following conditions is not required to be met for recognizing a provision? We know that entity should recognize a provision when the entity is having a present obligation as a result of past events. Yes or no? So which of the following condition is not required? They are telling you when a possible obligation that arises from past events. No, it should be a present obligation arising out of past events. So option A is not correct, is not required, whereas option B is required. It should be a present obligation as a result of past events. A reliable estimate can be made and it is probable that outflow of economic resources will be there. So that's why option A is going to be the wrong option. So even they are also asking the same, which condition is not required to be met. So option A is the correct option. Next one. Dividends are recognized in the statement of P&L only on fulfillment of which condition? Only when the right to receive the dividend has been established. Let us see. When the entity's right to receive the dividend is established, and one more thing, it is probable that economic benefits associated with the dividend will flow to the company. Nothing but AS9 condition, there should be reasonable certainty regarding its ultimate collection. Yes, this condition is also required. And also the amount of dividend can be measured reliability. Yes, dividend can be recognized in the statement of P&L only when all the three conditions are satisfied. The company right to receive the dividend should be established. It is probable that you will have the collectability in future, and even dividend should be measured reliably. So what is the correct option? Option D is going to be the correct option. So let us now talk about other MCQs, general MCQs which are given in this RTP. So let me start with the first question. A type of super user access to information system that enforces less or no limits using that system is known as. See, this is actually privileged access. That means if you are getting some access beyond your powers, beyond any limits, if you are getting complete access, that we call it as privileged access. So they are just asking you on that definition. So it is what we call it as privileged access. Next one. Which of the following is not an example of inflation of payments? We know that inflation of payments means increasing the payments than usual amount. So let us, they are asking us to identify out of the below options which is not an example of inflation, which is not a technique for performing inflation of payments. Let us see. Making payments against fictitious vouchers, yes, this is a technique for inflation of payments. Adjusting unauthorized or fictitious rebates, allowances, discounts, etc. to the customer accounts and misappropriating amounts paid them. So this is actually a technique used for suppressing of the receipts, not for inflation of the payments. So this technique, that means if you are giving excess discounts, or if you are not accounting for the amount which you have received, so that will not form part of inflation of payments, that will be a part of our suppressing of the receipts. So option B is not a technique for inflation of payments. Then making payments against the vouchers, the amounts whereof have been inflated, this is also a technique available for inflation of payments. Manipulating total of wage rolls either by including therein names of dummy workers, see this is also a technique which is available for inflation of the payments only. Now let us talk about question number 3. What requires the firms to establish policies and procedures for the retention of what? The retention period for the audit engagement is no shorter than what duration from the date of auditor's report. See, they are asking you a question regarding the particular standard which is talking about the documentation, and even they are talking about what you have to retain, what you have to retain, and what is that retention period. So we know that retention period etc. has been mentioned. We know the retention period, that means it should be stored for not less than 7 years from the date of auditor's report or group's audit report, whichever is later. So which firms establishes this retention policies? This also we know SQC1 is a particular standard which will tell us about these retention policies. And what we have to retain? Audit documentation. And also we can say engagement documentation. Sir, what is the difference between engagement documentation and audit documentation? Let me take some time and try to explain it. See, audit documentation means whatever documentation you are maintaining for all the clients. For example, if I am doing audit of client A, client B, client C, client D, so all this documentation collectively we call it as audit documentation. But documentation which is specific for this particular client, that we call it as engagement documentation for conducting audit engagement of A. Similarly, whatever documentation that is specific for this client B, that we call it as engagement documentation specific for audit engagement of client B. So SQC1 says, SQC1 is a standard which establishes the policies and procedures for the retention of the engagement documentation, and that retention period is 7 years from the date of auditor's report or the group's audit report, whichever is later. So the correct option should be option C, SQC1, engagement documentation for a period of 7 years. Now let us talk about the next one. What is a threat which occurs when the auditor promotes or is perceived to promote a client's opinion to a point where people may believe that objectivity is getting compromised? See, this is nothing but advocacy threat. This is actually the definition of advocacy threat. Straightforward question they are asking. Next one. What refers to the audit procedures performed to obtain an understanding of the entity and its environment, including the entity's internal controls, to identify and assess the risk of material misstatement, whether due to fraud, error at the financial statement and assertion level? Nothing but what procedures you will perform to obtain understanding of the entity and its environment and its internal control. We know that these procedures we call it as a risk assessment procedures. So the correct option will be option B. So with this we are done with all this MCQ based part. Case study MCQs also we have done. So normal general MCQs also we are done. So now let us see what else they are asking. So now they are asking some true or false statements. Let us have a look at them. No entry is passed for checks received by the auditee on the last day of the year and not yet deposited with the bank. So what are they telling? First point, see, the client has received some checks but they have not yet deposited it. Just because a check has been received and not deposited with the bank, even entry also was not passed in the cash or bank book. Is it correct accounting treatment? Definitely not. See, whether you deposit or not, you have to record that entry in your books of accounts whenever you received a check from the particular customer. So, but they are telling here no entry is passed for checks received by the auditee. Auditee means client on the last day of the year and not yet deposited with the bank. Is it a correct accounting treatment? No. So we have to ensure that whatever checks, whatever cash we are receiving till the date of the balance sheet, everything should be entered in our books of accounts. So for the first statement, the answer is going to be false or incorrect. This entry should have been recorded. Next one. Written representations from the management can be a substitute for other evidence that the auditor could expect to be reasonably available. That means they are telling that written representation can be used as a substitute for other evidences. Like for example, I want to use an external confirmation, but I am not able to get the external confirmation. In that scenario, can I completely rely on written representations only? No. Why? Because we have seen in SA 580 that written representation can only a supporting evidence. Written representation does not act as a evidence on its own. So written representation is nowhere a substitute for any other evidence. It is just a supporting evidence. So this statement is also incorrect. Next one, according to para 3 subclause 1, para 3 subpara 1 and clause D of CARO 2020, an auditor needs to report whether the company has revalued its property, plant and equipment, including right of use assets or intangible assets, or both during the year. And if so, whether the revaluation is based on the valuation of registered valuer. Specify the amount of change. If the change is 5% or more, it is actually wrong. See, in CARO, the first reporting requirement will be regarding property, plant and equipment. There will be a fourth point which they say, check whether any of the property, plant and equipment are revalued. If yes, we need to comment whether that revaluation is done on the basis of registered valuer certificate, and also if the rate of change is 10% or more in the net carrying value of each class of asset, then only we have to specify the amount. But here in the question they are telling only 5%, which is actually a wrong thing. The limit which is mentioned in the CARO is 10%. Next one. So the given statement is also false. Fourth one, communicating key audit matters in the auditor's report is a substitute for reporting in accordance with SA 570 when a material uncertainty exists relating to events or conditions that may cast a significant doubt on entity's ability to continue as a going concern. Simply what they are trying to say is, if you have to highlight some matter in the material uncertainty regarding going concern paragraph, instead of reporting that matter in the material uncertainty paragraph, we can report in a key audit matter. Do you agree with that statement? No. Why? Because in SA 701 we have seen clearly communicating key audit matter is not a substitute for disclosure which is required in the financial statements. It is not a substitute for giving a modified opinion. It is not even a substitute for material uncertainty regarding going concern paragraph required as per SA 570. But in the question they are telling it is actually a substitute, which is actually a wrong statement. It is not a substitute, should have been the correct answer. So this statement is also incorrect. Next one, a loan granted for short duration crops will be treated as NPA if the installment of principal or interest thereon remains overdue for one crop season. Not exactly. This is for long duration crops, whereas for short duration crops, if it remains overdue for 2 crop seasons, then we treat it as NPA. So this given statement is also false. So let us now start explaining about the next question. It needs to be ensured that the drawing power is calculated as per the extant guidelines formulated by the RBI and agreed upon by the concerned statutory auditors. Special consideration need not be given to proper reporting of sundry creditors for the purpose of calculating drawing power. See, this statement actually contains 2 wrong things. One thing is, so first they are telling this drawing power is to be calculated as per the guidelines formulated by the RBI. No, it is as per the guidelines formulated by Board of Directors. And also one more thing they are telling, special consideration need not be given to proper reporting of sundry creditors. No, you have to pay special attention to the sundry creditors. Why? Because some clients, they will try to under-report their creditors and for the purpose of getting excess drawing power. So special attention need to be given for calculating for sundry creditors while calculating the drawing power. So this given statement is also false. Next one, the duties and powers of Comptroller and Auditor General in relation to the audit of accounts of government companies shall be performed and exercised by him in accordance with the provisions of C&AG Act 1971. This is actually wrong. Why? Because when it comes to audit of government companies, the duties and powers of C&AG are governed by the Companies Act 2013. Not as per the C&AG Act 1971. When it comes to audit of government companies, the rules, the duties and powers of C&AG are governed by this Companies Act. Like as we have seen in one of the chapters, like once the statutory auditor gets completed, the auditor can the C&AG can order for either supplementary audit or they can order for test audit. These powers are not given to them under the C&AG Act. These powers are given to them under Companies Act. So the given statement is also false. Next, before holding inquiry by the central register, 30 days notice must be given. No. How many days notice must be given? 15 days notice must be given before conducting any inquiry. So these are the true or false statements which have been given. So even if we have a look at the answers also, so as we could see here, all the true or false statements which are given are completely incorrect, and we have explained you the proper reasons also. So let us now go to this complete descriptive questions. First we will start with nature, objective and scope of audit. So they are asking, the IESBA code establishes fundamental principles of professional ethics relevant to the auditor when conducting an audit of financial statements. Discuss and also explain the meaning of ethics. They are asking you to explain the meaning of the ethics, and along with that they are also asking you to explain about the fundamental principles or ethical requirements. So as we have seen, ethical requirements are called by various names. We call them as prerequisites, fundamental principles or ethical requirements we can say, and a professional code of conduct we can say, code of ethics we can say. So all these things refer to one thing, fundamental principles or ethical requirements. So what are those 5 ethical requirements? We know: integrity, objectivity, confidentiality, professional judgment, professional competence and due care, and professional behavior. So these are the 5 ethical requirements along with the independence. So that's what we are supposed to write. A very much direct question has been tested here. Next one, standards on audit apply in audit of historical financial information, whereas standards on review engagements apply in the review of historical financial information. Explain in detail giving examples. So obviously we know that standards on audit, these essays are applicable whenever we are conducting audit of any historical financial information. Similarly, when we are conducting review, like I told you, quarterly financial statements quarterly financial statements which are prepared by listed companies also will be verified by the auditor, but we don't call that assignment as audit, we call that assignment as review. So whenever we are conducting that kind of review engagement, standards on review engagements will be applicable. They are asking you to explain along with the help of some examples. So straightforward point. So they are just asking you some examples. Give some examples of the standards. So like as you could see here, how they have explained the answer. So first, it is to be understood that standards on audit, when they will be applicable when you are conducting audit of historical financial information, whereas review engagements, when they will be applicable when you are conducting review of historical financial information. And also the standards on audit, whenever you are conducting audit, then the standards on audit will be available. And in the standards say that we are required to obtain reasonable assurance, whereas when we are conducting the review, there we obtain limited assurance. For standards on audit, ask us to obtain reasonable assurance when conducting audit engagement. When we are conducting review, the scope of review is actually very much limited than the audit. There we are required to obtain only limited assurance. You need not even obtain reasonable assurance also. Then they are defining what do you mean by historical financial information, nothing but the past financial information. And they are further elaborating on the terms audit and review as I have explained. Then they are giving us a few examples, like as you could see here, essay 200 is the standard which is talking about overall objectives, essay 230 about audit documentation, 315 identifying and assessing the risk of material misstatement, 500 is about audit evidence, 700 is about forming an opinion and reporting on the financial statements. Similarly, they are giving examples on review standards also. SRE 2400 engagements to review historical financial statements, SRE 2410 review of interim financial information performed by independent auditor of the entity. So this question is nothing but just a further elaboration on standards on audit and standards on review engagements. Along with that, they are expecting you some examples from you. That's it. So now let us see the next question. The Code of Ethics for Professional Accountants prepared by the International Federation of Accountants identifies 5 kinds of threats to independence. Explain those threats in detail, giving examples. So we know what are the 5 threats which are identified by IFAC: self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. So please explain about that threats along with a few examples. So that's what even they have also presented in the answer. Next one. Let us talk about the next question. Engagement partner CA Hitesh Kapoor of Kapoor and Associates wanted to develop an audit plan of Sampurna Fabrics Limited. Discuss the matters to be described in such an audit plan. It's a direct question from the chapter Audit Strategy, Planning and Program. They are asking what points you will keep in mind while developing an audit plan. So we know that our plan should consider details of risk assessment procedures, and our plan should contain the details of responses to assessed risk, nothing but what substantive audit procedures and compliance procedures we have to perform. And even they are giving examples also, and they are telling a general statement: the audit plan is more detailed than overall audit strategy. And we know that audit strategy will set the scope, timing and direction of audit plan. And even they are giving an example like planning of auditors risk assessment procedures. That means risk assessment procedure should be included as a part of our audit plan. Along with that, further audit procedures, which further contains what? Compliance procedures and even substantive audit procedures. So all these things should be included as a part of our audit plan. Nothing but we have a question number 1 in our chapter Audit Strategy, Planning and Program. The same question has been repeated, nothing else. Next one. Without adequate knowledge of client's business, a proper audit is not possible. The auditor shall obtain an understanding of the entity's objectives and also strategies and those related business risk that may result in the risk of material misstatement. Explain giving examples. So this particular question is also from that particular chapter. What particular things you will try to understand regarding the client's business? What specifically we will try to understand? So there we have seen that we will understand about external factors, we will understand about clients' operations, we will try to understand their accounting policies, we will try to understand their applicable financial reporting framework, we will try to understand the strategies and business risk which are arising from that. So we are particularly asking what you will try to understand regarding entities, objectives and strategies, and what you will try to understand regarding business risk along with the examples of some business risk. This question is also there as a part of our material. So as you could see here, examples of potential risk, like as we have seen, failure to keep up to date with the new products, excessive reliance on a key supplier, lack of personnel with expertise to react to changes in the industry, insufficient or excessive production. And similarly, management's objective, this point I have explained, like different companies will have objectives to expand. Some companies will take the route of acquisition, some companies will take the route of starting from the scratch. So that example also they have given. So these are the few examples of objectives and business risk which we will try to understand regarding our client. Next question, you are being appointed as auditor of Track Limited for the first time. You want to determine materiality level, and for that you have applied percentage to a chosen benchmark as a starting point in determining materiality for the financial statements as a whole. What are the factors that may affect in identification of appropriate benchmark? What factors will influence your decision? So we have seen that benchmark could be any item of financial statement, asset, liability, etc. Sometimes there can be an indication applicable financial reporting framework. It depends on entity's capital structure. It depends on information needs of users of the industry, or sometimes there can be even a indication in applicable laws and regulations also. So that's what even they say in the answer. So any element can be taken as a benchmark, and it depends on attention of the users, like users pay to some information in some entities, so it depends on what information users are expecting. It depends on the nature of entity also. It depends on entity's ownership structure, and it depends on relative volatility of the benchmark. That means how volatile that benchmark is. So if the benchmark is very volatile, that might not be that suitable. On the other hand, if the benchmark is somewhat stagnant, that will be more suitable for selecting it as a benchmark. See, the term volatility means it is fluctuating a lot. That's all. So even relative volatility of the benchmark also we will try to consider. So now let us proceed with the next question. Question number 6. While conducting the audit of PAMMI Limited, the statutory auditors collected written representations from the management. The audit was finalized in addition to other audit procedures, but without making any inquiries, as the statutory auditors were short of time. In the light of this information, state the importance of inquiry as one of the methods of collecting audit evidence. See, this question we have seen in our material, audit documentation and evidence. In the question number 6, we have given one point. There are various methods of obtaining evidences. One such method is inquiry. Other methods are inspection, observation. All this we have seen. Now they are particularly asking you to write in a detailed manner about inquiries. So we know that inquiry means seeking information from the knowledgeable people, both within the organization or outside the organization. Inquiries can range from formal written inquiries to informal oral inquiries. Inquiries will give you required audit evidence, but they are not going to give you better evidence. That the evidence will be less persuasive, less convincing. And we have seen that by performing inquiry, we can get three kinds of information: either new information which we are not previously aware, or information which supports the information which we already know, information which contradicts with our information which we already know. So that's what the importance of inquiries. So that is what you are supposed to write a few lines about inquiry. So that's what even they try to mention even in the answer also. Next one. So let us talk about next question. GPS & Co. Chartered Accountants conducting the audit of Pratibha Limited, a listed company, for the year ending 31st of March 2022. Is concerned with the presentation and disclosure of segment information included in the company's annual report. Whenever they say segment information, the immediate standard which should strike your mind is SA 501. So SA 501 is a standard which is talking about this audit evidence only, but special considerations for selected items. Like 3 items are selected under SA 501, which are existence and condition of inventory. Then we have litigations and claims, and the third one is segment reporting. So now they are asking us some question regarding segment information. So immediately SA 501 should strike our mind. GPS & Co. wanted to ensure that methods adopted by the management for determining segment information have resulted in disclosure in accordance with the applicable financial reporting framework. Guide GPS and Co with the examples of matters that may be relevant when obtaining an understanding of the methods used by the management with reference to the relevant standard on auditing. Nothing but they are asking you, as per SA 501, what are the various matters that you will consider in determining whether management used appropriate methods for identification of segments. See, we know that management will prepare financial statements. While preparing the financial statements, they will identify the segments. And we have a dedicated standard AS 17 which provides a guidance regarding how to identify the segments. Now they are asking what points you will keep in mind as an auditor to determine whatever methods which are used by the management for determining the segment information. Is it correct or not? So how you will try to verify it? So here also, if you observe in the answer, first they have given reference to SA 501 audit evidence specific considerations for selected items. Then they are telling what matters I have to keep in mind to check whether segment information is properly presented or not. Some general points they say, like sales, transfers and charges between segments and elimination of inter-segment components. That means between the segments, if any transactions are happening, that should be cancelled. Like we do it in the branch accounts, inter-branch transactions will be cancelled at the time of finalization. No, same even in between the segments also, if something is happening, some inter-segment transactions are happening, that should be eliminated. I will check whether that transactions between the segments are eliminated or not. Comparison with budgets and other expected results. For example, operating profits as a percentage of sales. Nothing but they are asking you to perform analytical procedures, calculate some ratios, do the comparison with the budgets, etc. The allocation of assets and cost among segments. Nothing but whatever assets are there, whether they are properly segregated among all the segments or not. Whatever cost has been incurred, that is also segregated across all the segments or not. We need to check it. And also consistency with the prior periods. Nothing but once again analytical procedures. Intra-firm comparison. Compare the current year segment information with last year's segment information. So these are the few things which I will verify to know whether the segment information is properly presented or not. So now let us have a discussion about next question also. Pacharanga International Limited is manufacturers of pickles, ginger garlic paste, jams, etc., having its plant at Jaipur. Being in food industry, the company is facing many litigations in various courts across India. Auditors SPV and Co wants to identify such litigations and claims involving the company which may give rise to risk of material misstatement. Guide the auditor as to how they should proceed for the purpose. Now whenever you read this term litigations and claims, here also the standard which should immediately strike your mind is SA 501. Why? Because this standard is providing us the guidance how to obtain evidence regarding litigations and claims. There they say that here they are specifically asking what procedures you will perform to identify whether there is any risk of material misstatement regarding litigations and claims. We know that SA 501 will ask us to do three things. What are they? First, review the legal expenses account, and one more thing they will ask us. So let me open the answer for you. So three things they will ask us to do. So inquiry of the management where applicable, including in-house legal counsel, read the minutes of the meeting and correspondence between those charged with governance and the legal counsel, and one more thing we have to verify the legal expenses. Very simple. See, they are not asking detailed audit procedure, they are just asking what procedures you will perform to identify the risk. Now by performing these three procedures, I will identify whether there is any risk of material misstatement regarding litigations and claims. If I identify any risk, then I will perform further audit procedures. If I don't identify any risk, I will stop with these three things only. So they are not asking us complete audit procedure, they are just asking us what procedures you will perform to identify the risk of material misstatement. We will do only three things. That three things are explained here. That's it. Inquiry of the management and those charged with governance, reviewing the minutes of those charged with governance, reviewing the legal expenses account. That's all. Next one, TRS and Associates Chartered Accountants, having completed the audit of Genuine Leathers Limited, has started the assembling of final audit file. TRS and Associates has established policies and procedures for the timely completion of assembly of audit files, explain the various aspects relating to final audit file discussed in SA 230, giving specific reference to SQC1. Nothing but they are asking a direct question regarding how to assemble the final audit file. So we know that final audit file has to be completed, assembly of the final audit file has to be completed within 60 days from the completion of the audit. That's what SQC1 says. And while assembling the final audit file, we will not perform any additional audit procedures. It involves just some administrative works like deleting superseded documents, giving the references, or conducting the meetings, etc. And whatever audit file that you are preparing, that should be retained for a period of 7 years from the date of auditor's report or group's audit report, whichever is later. And during that retention period, none of the content of the audit file should be deleted or discarded. So we have a dedicated question regarding this in our material. So that's what they are trying to ask you here. Now let us have a look at rest of the questions from this RTP. So we'll start with question number 9A. Generally, IT benefits an entity's internal control by enabling an entity to enhance the timeliness, availability, and accuracy of the information. Discuss explaining the other relevant points in the above context. Nothing but they are indirectly asking you the question how IT is going to benefit the internal controls of an organization. So one advantage I have already told, it will help in timeliness of the information, availability of the information, and it even ensures that information is very accurate. Now they are asking you to explain other benefits of the IT also, because of this other benefits of IT which will be there for internal control system. So like as we could see the answer here, they are telling us various ways in which information technology is going to benefit this entity's internal control. Like if they are consistently applied, it can betterly perform complex calculations, and it is also helpful for processing large volumes of data. It enhances, that is increases the timeliness, availability, and accuracy of the information. It facilitates additional analysis also, you can do the extra analysis also, and also you can monitor or you can review the performance of its activities, entities activities, its policies and procedures. That means we can continuously monitor how the entities activities are getting carried out. Even we can reduce the risk that controls can be circumvented, which means violated. And also it enhances the ability to achieve proper segregation of duties. That means it will help in better segregation of duties also. Nothing but we can also write here what are the advantages of IT for the organization. We can write even the answer from audit in an automated environment also. So this is what this question is about, how IT is going to benefit entities internal controls. Now let us talk about next thing. Next question 9b. While conducting the audit of Smart TV Limited, engagement team of HTR & Co has considered materiality and audit risk throughout the process. Discuss explaining the concept of audit risk. Nothing but they are asking you to explain the meaning of the audit risk. So we know that audit risk is risk of expressing an inappropriate opinion when the financial statements are materially misstated, and even we have seen the definitions of what is included, what is not included. So the same thing they say here. So first they are defining the term audit risk, and then they are telling materiality and audit risk are considered throughout the audit. Like we need to identify and assess the risk of material misstatement. On the basis of that, we need to plan our further audit procedures, and also we have to determine whether this because of this audit procedures, am I able to find out any material misstatement which causes me to modify my auditor's opinion. Nothing but they are telling what is the meaning of defining the audit risk, and also how audit risk is assessed. Nothing but how we are going to use this concept of audit risk in our audit. Nothing but we identify risk of material misstatement by performing risk assessment procedures. On the basis of that, we plan our further audit procedures. By that, we will come to a conclusion whether the financial statements are free from material misstatements or not. That's it. Next one, let us talk about question number 10. It is a direct question. Saburi Textile Limited is an established player in the textile manufacturing sector. It has developed strong internal controls in almost every area. It has appointed you as an internal audit team head. Internal audit has a very strong relationship with internal controls of the company. Internal audit analyzes the effectiveness with which the internal controls of the company is operating, and also makes suggestions for improvement in that internal control. Explain stating clearly activities related to internal control. Nothing but they are asking you what are the activities of the internal audit with respect to the internal control. Nothing but how internal audit is related to internal control, or what internal auditor will do with regard to the internal control. This question also we have in our material as a risk assessment and internal control. So nothing but since they are asking us what are the activities of internal control, it includes 4 things. It involves evaluation and analysis of internal controls. It even involves analysis, review of the financial information. It involves review of operating information, and even internal auditor is going to check compliance with the laws and regulations also. So that's what even they say here. Auditor's activities include evaluation of internal control, examination of financial information, review of operating activities, and even checking the compliance with laws and regulations. Very much direct question from our material. Next one. So let us talk about from the chapter Fraud and Responsibilities of the Auditor. CA Dev of Dr. Sanduja & Co, statutory auditor of company Girija Fabs Limited, in the course of performance of his duties as an auditor, has reason to believe that the offence of fraud to the tune of 1.25 crores has been committed in the company by its employees. So nothing but auditor found out the fraud in which the amount involved is more than 1 crore. So directly the thing which should strike your mind is 143 subsection 12 reporting requirement, and since the amount involved in the fraud is more than 1 crore, reporting to the central government will be applicable. Now let us see what else they are telling. CA Dev, the auditor, wanted to report the matter to the central government as per law. Okay. He refers to Rule 13 of Companies Rules 2014, Sub-Rule 1 of the said rules states that if an auditor of a company, in the course of performance of his duties as a statutory auditor, if he has reason to believe that an offence of fraud which involves or is expected to involve individually an amount of 1 crore or above is being or has been committed against the company by its officers or employees, the auditor shall report the matter to central government. This also we are aware, just they are reading out that respective rule of the Companies Act. In the above context, explain the manner of reporting to the central government. Simply they are telling manner of reporting to central government they are asking. So we know that first audit committee or board of directors will be told within 2 days of the knowledge of the fraud, give them 45 days of time for receiving a reply. If reply is received within 15 days, communicate the matter in form ADT4, and what and all you have to fulfill. That things we have already seen in our company audit chapter. The same thing they are asking us here. So this is what will be 143 subsection 12 reporting requirement. Easy question. Next one. While conducting audit of Always Best Company Limited, Auditor B of BL Kapoor & Co. observes a lot of intentional misstatements, example, fake invoices, and considers these encounters as exceptional circumstances, and this brings into his question ability to continue performing the audit. Advise B as to what he is supposed to do. Nothing but this question is about lot of intentional misstatements, nothing but fraud. So sometimes because of fraud you might come across circumstances where you will be unable to continue the audit. Then what you are supposed to do? So this question also we have read in our material. Auditor's inability to continue as an audit, continue the audit because of the fraud. Then what auditor is supposed to do? Determine whether there are any professional legal responsibilities to communicate the matter with the regulatory authorities. Determine is it suitable for you to withdraw from the engagement. If it is suitable for you to withdraw, yes, you can do it. Discuss with the appropriate level of management, and then also determine whether there is any professional or legal responsibility to communicate about this matter with those charged with governance or regulatory authorities. So this question also we have seen in our material. The same question has been tested. Next one. Next question. Question number 13. With respect to audit in an automated environment, explain the following. Nothing but they are asking us straightforward definitions. What is the definition of application? What do you mean by automated? What do you mean by computer assisted audit techniques, data processing, general IT controls? Straightforward definitions they are asking, just you are required to reproduce the definitions. Like applications, these are computer software programs that provide a medium for recording, storage and retrieval of business operations. Nothing but whatever apps we are using today. Automated, nothing but if any task which is getting performed manually, if it is performed by a computer system without manual effort, then we call it as automated. CAAT, nothing but computer assisted audit techniques, nothing but if data analytical tools are used by the auditor for audit purposes, we call them as CAATs. Data processing, nothing but it is a systematic recording, storage, retrieval, modification and transformation of electronic data. And finally, general IT controls, nothing but these are a type of controls that help in mitigating the risk that arise due to information technology and information systems. That means these are the controls which are operating over entire IT environment, not specific to any particular application. Right. So now let us talk about the next question. Explain the meaning of internal financial controls, clearly stating reporting requirements with reference to audit on adequacy of internal financial controls. Also discuss about its reporting requirements on various types of companies. Simply they are asking you to write about internal financial controls and reporting requirements. We know internal financial controls definition we have read in the risk assessment and internal control from our material. So what do you mean by internal financial controls? These are the controls which are implemented for ensuring proper conduct of the business, and it is having objectives like safeguarding of the assets, prevention of frauds and errors, accuracy and completeness of accounting records, and also timely preparation of financial statements. So this is what the definition even we have also read in our material. And reporting requirements 143 subsection 3 clause I, which says that auditor is required to report on internal financial controls. And even some companies are exempted from applying internal financial controls. What are they? 1% company, small company, and also a company which is having a turnover less than 50 crores as per last audited financial statements, and also having aggregate borrowings from banks or financial institutions of less than for any financial year less than 25 crores. These companies are not required to implement IFC. So if you are appointed as auditor of these companies, we will say under 143 subsection 3 clause I, the client is not at all required to implement internal control. That's it. Now let us talk about rest of the questions also. We'll start with question number 15. What are the advantages of statistical sampling techniques in audit? Nothing but they are asking you a straightforward question. What are the advantages of statistical sampling? Direct question. Like we know the advantages like The sample size does not increase in proportion to increase in the size of the population, and also the sample selection will be more objective, that is unbiased, and it is more defensible. That means you can that will argue in your favor. Defensible means you need not prove once again your statistical sampling approach once again. Why? Because it is a globally accepted scientific methods. This method provides a means of estimating minimum sample size with a specified risk and precision. That means with a small sample size also you can take a limited risk. Point number 4 is also more or less same. It is also a means for taking a calculated risk. That means you will take a limited risk here, and also it may provide a better description of large mass of data than the complete examination of all the data. So that means if you verify the transactions on sampling basis, that will give you a better understanding of the entire data than primarily examining each and every transaction. So straightforward question. Let us have a look at the next question. Sampling risk can lead to two types of erroneous conclusions. Explain clearly, stating meaning of sampling risk. Nothing but they are asking you the sampling risk along with its types of sampling risk. We know that sampling risk means the conclusions which auditor will get on the basis of sample will be different if the entire population is subjected to same audit procedures. And we know that sampling risk is going to have an impact on test of details also. It is going to have an impact on test of controls also. We have seen when it comes to test of controls, it leads to risk of over reliance or risk of under reliance. Risk of over reliance means you are overly relying on internal controls than when actually they are, and we have seen that this is going to impact our effectiveness. Whereas risk of under reliance means you are not relying internal controls when they are effective. This will impact our efficiency. Similarly, we have seen the impact on test of details also. Sampling risk is going to impact test of details in two ways: risk of incorrect acceptance, risk of incorrect rejection. So risk of incorrect acceptance means you are believing that financial statements do not contain a misstatement when actually they are, and it is leading to risk, it will lead to audit risk. And risk of incorrect rejection means you are not believing on the, you are denying the fact that financial statements are not containing a material misstatement when in fact they are free from material misstatement. This will not lead to any audit risk. So this clearly we have explained in our classroom what do you mean by sampling risk and how the sampling risk is going to have an impact on our audit procedures. Then next thing, analytical procedures they are asking. If analytical procedures are performed in accordance with SA 520, identify fluctuations or relationships that are inconsistent with other relevant information or that differ from expected values by a significant amount, how the auditor should investigate the differences. Nothing but last question in our material, how the auditor will investigate the differences or fluctuations of analytical procedures. We have seen that first you will go and inquire with the management. If the management gives the information, well and good. If the management is not giving information, then what we will do? Then we will try to perform alternative audit procedures. If that is also not possible, modify our opinion. Very simple question. Next one. Discuss the matters relevant to the auditor's evaluation of whether expectation can be developed sufficiently precisely to identify a misstatement that when aggregated with other misstatements may cause the financial statements to be materially misstated. This also we have seen, whether an expectation developed using analytical procedure may help in identification of a material misstatement or not. We have seen that it depends on three factors: the degree to which the accuracy with which the information can be predicted. If the information is more predicted, more chances that it will lead to identification of material misstatement. Second one, the degree to which the information can be disaggregated. If you are able to segregate the information more, then you will be then there are more chances that it will result in a material misstatement. Like instead of performing audit procedures on a diversified entity, if you try to divide it business wise and then do the comparison, that will result in better identification of material misstatements. And the last factor, it depends on the availability of financial and non-financial information and also reliability of that information. So all these things we have covered. Next, let us talk about audit of items of financial statements. Direct question they are asking, how you will verify recovery of bad debts written off. That means you have earlier written off the bad debts, but now you have recovered it back. What and all you will try to verify. So like some common points which they say here, like ascertain what is the total amount which has been written off and try to cross check with the trade receivables account. Ensure that all recoveries have been properly recorded in the books of accounts. Examine notification from the court or bankruptcy trustee. Nothing but in case if the debtor has become bankrupt and his account has been transferred to this official receiver, and if that person will make a settlement, partial settlement will happen. So check that notification which you have received from the bank or bankruptcy trustee. That means if you are getting a full and final settlement from the official assignee or receiver, so check all these notifications from the respective courts. and also check credit manager's files for the amount received and see that the amount has been deposited in the bank promptly. This is also in the case of bankruptcy. This person who has become bankrupt, his account will be assigned to one person. Now he will realize all the assets and pay the liabilities proportionately. Check whether that amount has been properly received or not. Verify acknowledgement receipts, nothing but confirmation receipts, and also verify what internal control system is operating over bad debts. Next one, receipt of insurance claims, nothing but if you have suffered any damage and if you have lodged a claim with the insurance company, you will receive the compensation. How you will verify that compensation? So nothing but I will check whether the policy, whether application that you have filed for lodging a claim, and how you have calculated that loss, that statement calculation I will see. I will check the correspondence between the entity and that insurance company, what communications they are having, and how the insurance company finally determined the loss amount, and how much amount they have paid, whether you have properly recorded in the books of accounts or not. That's all. Payment of taxes, this question we have already seen in our material. Like in case of payment of taxes, we have to check with the assessment orders, notices, whatever you are receiving. And also today online payment is very popular. So since online payment is happening, it is not that important from whose account the money is going. It is very important again as to whose PAN number the money is getting deposited, and all these things you can check. Next, sale proceeds of scrap material. This also you need to check whether proper records are maintained for the scrap which is getting generated, and also there should be proper internal control system like calling for quotations or tenders when you are selling the scrap material. When you don't know exact selling price, better to have internal controls like calling for tenders and quotations. So like this, some internal control should be there, and we have to check whether the sale from the scrap is properly recorded in the books of accounts, whether this scrap records, whatever has been kept, the quantity as per the scrap records and the quantity which you have sold, both are matching or not. So like this, these are the various things which I need to verify. So very simple question. I have told you the key points, detailed points you can go through in the answer. Now let us talk about next thing. So while conducting audit of Airspace Limited, the auditor observes that it has issued shares at a discount to its creditors when its debt is converted into shares in pursuance of a bank restructuring scheme in accordance with guidelines specified by RBI. Discuss explaining clearly the provisions relating to discount on issue of shares. See, this is nothing but we have seen that amendment no at the beginning of this RTP, like a company cannot issue discount, it cannot issue shares at a discount unless as a sweat equity share, and also it can issue the shares as a part of your debt restructuring scheme, etc., etc. Whatever information we have seen in that amendment part, the same content has been reproduced. That's it, nothing new content is there here. Now let us talk about questions from the company audit. Before appointment is made under section 139 subsection 1 of the Companies Act 2013, the written consent of the auditor to such appointment and a certificate from him or it that the appointment, if made, it shall be in accordance with the conditions as may be prescribed. Nothing but here the intention of their question is, before that appointment we have to fulfill some formalities which is applicable for all the appointments. What are those formalities they are asking? So we have seen in the Companies Act chapter that so before auditor gets appointed, we need to get a written consent from him that he is willing to act as an auditor of a company, and also we need to obtain written certificate. So as you have seen here, written consent, and after that some certificate is also be required to be obtained regarding 4 matters. What are they? So that the auditor is qualified and is not disqualified. His appointment will be as per the term, nothing but his appointment will be within that period permitted under rotation, and also the proposed appointment is within the limits laid down, nothing but ceiling limit, and also if there are any pending proceedings against the auditor or any of the firm, etc. Regarding these 4 matters, written certificate needs to be obtained. And then finally, after the auditor gets appointed, company is required to file one form ADT1 to the ROC within 15 days of auditor's appointment, communicating about appointment of the auditor. That's all. Now let us talk about question number 22. Harry Limited appointed CA Lakshman as an auditor of a company for a term of 5 years. Further, the company offered him the services of actuarial services, which were also approved by the board of directors. As an auditor, how would you deal with such a situation? So it is clearly a case of subsequent disqualification. Why? Because section 144 prescribed 8 services. In that 8 services, one such a service is actuarial services. If a person is providing any of the section 144 services, he will be disqualified to act as an auditor. So now you are already appointed, then you are providing actuarial services, so it will be a case of subsequent disqualification. What you are supposed to do as per 141 subsection 4, immediately vacate the office. That's it. So try to present it as a practical question. Next one. Explain the reporting requirements the auditor should ensure under CARO 2020 relating to PPE and intangible assets. Nothing but the first CARO reporting requirement they are asking. So what and all you are required to report regarding property, plant and equipment. So as we all know, first we need to check whether physical verification has been done, whether the management is maintaining proper records which should show quantitative details and also situation, and then whether this property, plant and equipment are physically verified at reasonable intervals and whether any material discrepancies are found out, whether the title deeds are in the name of the company or not. If not, we need to give some details. Then next point, whether there is any revaluation happening, and if the change is 10% or more for each class of asset, then the amount is required to be reported, and also whether there are any transaction pending against the company under Benami Prohibition Transactions Act. That's it. Next one, audit report. From audit report, let us see what questions they are asking. The auditor shall evaluate whether the financial statements are prepared in accordance with requirements of applicable financial reporting framework. Explain stating specific evaluations. We know that as per SS 700, two kinds of evaluations auditor is required to do: quantitative evaluations, qualitative aspects evaluations and specific evaluations. Here they are asking you about specific evaluations, not the qualitative aspects. So what are the specific evaluations? Whether the financial statements disclose the significant accounting policies, whether the accounting policies are consistently applied, whether accounting estimates are reasonable, whether information is relevant, reliable, comparable, understandable, and whether the financial statements provide adequate disclosures, and also terminology is correct or not. Even I have told you an alternative answer also. We need not remember this specific evaluation separately. We might have already read question number 1 in chapter number 1. What are the points which are required to be considered before expressing of an opinion? That points we can write it here also. Next one, next question. When the auditor disclaims an opinion on the financial statements due to an inability to obtain sufficient appropriate audit evidence, the auditor shall amend description of auditor's responsibilities. Nothing but, we know generally auditor's responsibility paragraph will be there in the audit report, which contains a lot of information. If you get a disclaimer of opinion, specifically what you will check? See, generally when we include auditor's responsibility in normal circumstances, we will say that as an auditor we obtain sufficient and appropriate audit evidence. But here we have to say that we are not able to obtain audit evidence. That one slight modification we have to do. That's the only thing which we have to change. So this question is about if the auditor is giving disclaimer of opinion, what changes you will make to auditor's responsibilities. Let us see what they are telling. See, when we generally give disclaimer of opinion, when we are not able to obtain sufficient and appropriate audit evidence. So in such a cases, what changes you will make in the auditor's responsibilities? Let us see. When the auditor disclaims an opinion on the financial statements due to inability to obtain evidence, the auditor shall amend the description of auditor's responsibilities. That means you have to make some slight changes to the auditor's responsibilities paragraph in the audit report. What are they? A statements that auditor's responsibility is to conduct an audit of entities' financial statements. This we already know. This we generally will include. So we have to include a statement that in the auditor's responsibility paragraph, our responsibility is to conduct audit as per standards. A statement that, however, because of the matters explained in the basis for opinion paragraph, we are not able to obtain audit evidence. This is the change which we will be making. In normal circumstances, what we will say is we have obtained sufficient appropriate audit evidence, then we give the opinion. But since we are giving disclaimer of opinion, we can't say that statement we have obtained sufficient and appropriate audit evidence. So alternatively, what you should say that because of certain matters I am not able to obtain sufficient appropriate audit evidence. So that is the only change which they have to make. Rest of these A and C points are common. The statement about auditor's independence and ethical responsibilities. This is anyhow common. This we normally include in normal audit responsibilities also. But only change which I will make in responsibility paragraph in the case of disclaimer of opinion is only this particular paragraph. That's it. Next one. Next, bank audit. This is nothing but question number 26. They are asking about they are asking you to how you will classify substandard, doubtful and loss asset. This is something from accounts of the banks which you might have read in your accounts. That thing they are asking. So when it will be classified as substandard, like which has remained in NPA for less than 12 months and the provision is 15%. Doubtful, when it will be classified, and when it in doubtful also what categories will be there. Loss, when it will be classified, what will be the provision. See, all these things you have read it as a part of your accounts of the banks. So the same point they are asking you here. This is somewhat related to accounting question. Next one. Explain the following in the context of bank audit. Nothing but they are asking about expenses now. So how you will verify operating expenses? We know that they are broadly classified operating expenses under one head. They told us to verify supporting documents, check whether proper internal controls are there, wherever possible try to perform analytical procedures. This is how we are going to verify operating expenses. And how you will verify provisions and contingencies. This also we have read in our material. When it comes to provisions, three kinds of provisions will be there. One is provision for NPA norms. For this we need to check whether asset classification provision is done as per Banking Regulation Act or not. Then other one will be provision for taxation. How you will check provision for taxation? Since we also have a knowledge about Income Tax Act, you calculate the tax liability on your own, then try to compare it with the management's calculation. And then finally, provision for other expenses. Check under what circumstances these provisions are created and check whether these provisions are correctly calculated or not. So that is what we are supposed to verify. Even they say the same thing in the answer also. So like when it comes to operating expenses, verify internal control, and also check the supporting documents, substantive analytical procedures like assessing the reasonableness of expenses by working out the ratios, nothing but analytical procedures, etc. And also check them with supporting documents. So similarly, they will ask us provisions and contingencies, nothing but I will check this asset classification like NPA, substandard, all this has been done properly or not. And also I will try to check whether this percentages as per the Banking Regulation Act has been followed or not. That's all. Next one, audit of different types of entities. First, they are asking pilferage is one of the greatest problems in any hotel and the importance of internal control can't be undermined. Explain. Nothing but they are asking you in brief how to conduct a audit of a hotel, that you can write it. Next one, no inspection under section 79 of the Multi-State Cooperative Societies Act shall be made unless a notice has been given to the Multi-State Cooperative Society. Explain stating clearly how such inspection can be made and also state the powers available with the central register. So they are asking you about provisions of in the inspection as per section 79 from cooperative societies audit. They are asking a question. So we know that someone should make an application like either a multi-state cooperative society, either a federal cooperative society, or not less than 1/3 of the members, not less than 1/5 of the members. They have to make an application. And also before we make that inspection, 15 days of notice must be given. And what powers will be there for the person who is conducting inspection? He shall have access to books and documents. Every officer shall provide him the required information, and even he can call a meeting of the company also if it is required. And after completion of this inspection, this report is required to be circulated to Multi-State Cooperative Society within a period of 3 months from the date of completion of such inspection. So that's all. So this is what the RTP is about. No significant changes at all, no significant amendments at all. Majority of the things, almost all 95% of the content, whatever is there in the RTP, everything is a part of our material. Hope this explanation has helped you in your preparation. All the very best guys. Do very well in your exams. Bye.